Okay, I want to bring in Neel Mitra, excuse me. He's the analyst at Simmons Company International, joining me on the phone from Houston. And Neel, we're just discussing this deal, a huge rise in this stock in Dynegy, a $450 bid. What do you make of this deal?
I think it's a good price for Dynegy at this point. We have to keep in mind that the stock is down about 60% year to date and almost 30% month to date. So it wasn't too long ago that the stock was $5. So the premium is there, but with weak natural gas prices, weak power demand, the operating environment for Dynegy going forward is especially tough.
Neel, this is John Erlichman. Did anything change after everybody saw those lousy quarterly results a week ago? Did it all of a sudden change the entire sentiment on this story, even though the company already faced hurdles?
No, I don't think it did at all. The company reported good results, but a lot of that came from selling call options in the forward market, so it was kind of detracted from a market recovery in the future. I think it's just been a long story of weak natural gas prices and weak power demand in the Midwest especially.
Yeah.
Companies in the Midwest have definitely had a more difficult time than other parts of the country.
But Neel, if you were watching the options market, though, weren't they betting on some sort of deal possibly happening? I mean, you saw, I think you saw options. I think you saw the volume or trading hitting a record or something like that. Expecting a rally in this stock.
Yeah, I think Dynegy has long said that they have wanted to be a participant, a part of industry consolidation, and with the recent deal with RRI and Mirant to create GenOn Energy, we knew that it's something that everybody was looking for. But consolidation takes a lot of time, and it wasn't something that we saw right on the horizon. So it was a bit of a surprise to us.
Neel, Dynegy is leaving the door open for somebody else to come in, if they dare. Is there anybody else out there that would potentially jump in here and come out with another bid?
On the public equity side, I just don't see it. A lot of integrated utilities that would be looking to add to their merchant arms wouldn't look at Dynegy just because it would be EPS dilutive, and shareholders really don't want to accept that at this point.
Right.
A second point to consider is that Dynegy is one of the more over-levered IPPs in this current environment. They have about a 67% net debt to cap, and the debt is definitely hard to service in what is a weak operating environment. So
yeah.
While Dynegy doesn't have any debt maturities until 2012, it doesn't look like the earnings are going to pick up substantially, especially as above market hedges roll off.
Right.
So that's definitely a concern moving forward as to whether this company will be able to make it out in the 2013-2014.
Okay, so Neel, just quickly, with a parent like Blackstone, what do you expect is going to happen at Dynegy?
That's not really my area of specialty, but I think what Blackstone is really betting on is a recovery in natural gas prices or any recovery in power prices. They'll be running exclusively almost a baseload coal fleet by selling the combined cycle assets to NRG.
Okay.
So in that case, if there is market recovery, I think it will be substantial.
Okay. Neel, we've got to go.